Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, January 26, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I always like to start with the big picture, work our way into the day itself. And you know, if you've been following the daily Tesla report for the last month or two, that we tested a targeted long-term resistance area. 6-month plus descending channel top that this week is at 254.40, and we tested it. And when we tested it 5 weeks ago, I'd mentioned how the channel bottom that then was in the 180s and dropping, now 176.25 on the weekly chart, should be considered attainable over the following 3 to 5 months or sooner. And that sooner became clearly indicated when we settled about 2 weeks ago almost below this upper 220s, low 230s, a channel speed line support, now resistance. This area has been reduced in significance. I'll get to that in a moment. But that was our secondary sign of weakness. That's when we were clearly anticipating as a clear objective this descending channel bottom at 176.23, 176.25 on the weekly chart. We may well test this area today. There's also a 5/8 downside Fibonacci retracement that you can see here that is off the January 23 low against the more recent July 23 high. So there's a lot going on in there. This area is well suited to absorb not only daily selling pressures, not only 3 to 5 day swing trade selling pressures, not only 2 to 3 week swing trade pressures, but also 2 to 3 month to 3 to 5 month near-term investing. Because guess what? Following a test of 176.23, thereabouts, we can rotate back up to channel resistance. That is presently, once again, in the mid 250s and dropping. So I've been saying how we could continue to trade inside of this structure for months to come, all the way through spring perhaps, because it could take 2 to 3 months to rally back to 254.40. I think it's funny how I mentioned at the time 2 to 3, 3 to 5 months possibility down to 176.25. It took all of about 1 month, a little bit more than that, less than 5 weeks. So let's take a look. I do need to continue with the downside because obviously this market is on its heels. And, while I'm confident that this is your textbook support, technically speaking, as we move through February and into the second quarter, there's nothing to say that we won't settle below it today. And if we do close below 176.25, that does need to be by a 1% margin for sell signal clarity. And that magic number today is 174.48. So if we sell off today or continue to sell off and we close at 174.48 or lower, the big picture looks something like this. Bearish continuation over the next several months, possibly, the same distance took about 4 or 5 weeks. This could happen by the end of February. So if we close today at 174.48 or lower, I'm just going to say 2 to 3 months or sooner. Could be within a full month of closing below 176.25 by a full 1% margin that I would expect this former descending channel top that is presently 109.56 and dropping, combined with the January 23 low of 101.81. So yes, we could have a meaningful double bottom in this zone if tested as we move through the second quarter. There is, and I'll just mention this, I'm not trying to rattle anybody's cage, but I am telling you that if we were to violate 101.81 over the next month or two, I'm looking for the mid to upper 20s, and I kid you not. And I will begin diagramming that out. I've already charted it out, but there's only so much room in this PDF file. So there you have it, 174.48, your red line, closing today below 174.48. If you've been bottom picking, if you if you liquidated those puts, those 170, 180 out of the money puts that I mentioned a month and a half ago as we were testing long-term resistance in the mid 250s, if you liquidated them entirely, or if you're now buying Tesla in the mid to upper 170s, and that is what's to do right now. That is the play, to liquidate those puts, at least in part, and actually go long Tesla. You're bottom picking the mid to upper 170s in Tesla right now. But if we settle today 174.48 or lower, forget all that, reverse. If you bought Tesla, reverse and go short Tesla, whether that's shorting Tesla outright or whether you're then reaching for, say, a 102 strike out of the money put that doesn't expire for at least, I would go at least 3 months out on this, even though my gut tells me this will take all of about another 3 to 5 weeks if we close today at 174.48 or lower. I think that kind of covers the downside pretty well. Let's talk upside today. Let me look for the right chart. This one's pretty good. We still have 194.07. We gapped below that on Thursday. It is still able to contain daily buying pressures. And once tested, we could fall back to 176.23 within 3 to 5 days. Present volatility within 1 to 2 days. You can also bottom pick 176.23 3 to 5 day swing traders in anticipation of 194.07. We could fill this area out for the next few days. But, this is a significant zone of support we are closing in on now. 176.23 to 177.25. And I don't want you to get hung up on an aggressive short position at 194.07. I think following a test of this channel bottom, we can, within a day, 3 days or so, close back above 194.07, which would pivot the market upward over the next week or two to 219.15. Let me also talk about 219.15 in the context of bottom picking this 176.23 channel bottom. Bottom picking 176.23, you can plan for 2 to 3 week swing traders, 219.15. This is a new descending 1/3 speed line that is based in part on Thursday's low. And as we break to, as we break to a new low today, assuming we do, then we reconstruct this speed line. And the low that stays, then once you turn up off that low, we stick to this speed line. This is a trend defining speed line. And so I will say that once we test 176.23 by the end of February or sooner, quite possibly within 2 weeks, especially if we settle today back above 194.07, 219.15 expected, where we can top out. This is a 4-star multi-week resistance area. We can top out not only for a week, but quite possibly through the rest of February and fall away again. We could fill this wedge out for the next month. That is quite possible. And it would be, by the way, a settlement above 219.15 over the next few weeks that would then signal a retest of the 254.40 long-term channel top. I will mention, as I go back to this chart, that the descending 1/3 speed line at 219.15 has a descending 2/3 speed line presently in the low. It's actually in the it's in the upper 250s, around 259 as I recall looking today. And that really is then a part of a range. So we can't really chart everything in one, and I'm looking to see if we did, and we didn't. So closing above 219.15, I will say then that you can anticipate within 3 to 5 weeks a rally into, and I know I'm way ahead of myself here, but I just want to let you know what I'm thinking. If we close above 219.15, we've got a good low through February, the following 3 to 5 weeks, then likely to push onward and upward into the mid to upper 250s. Remember, there's a descending 2/3 speed line that comes down in the same vicinity, where once again we can top out, say through March, and fall away again. We can once again fill this formation out for the next few months. Now, there's nothing to say that we absolutely will. And once again, I will just remind you that if we settle today below 176 and a quarter by the required 1% margin of 174.48 or lower, we enter another significant sell signal with increased downside acceleration. Is that such a phrase? It actually seems to be counterintuitive or counter, what is is it oxymoron? Accelerated descent? In any event, I think if we close at 174.48 today or lower, no good reason to be long Tesla over the next 1 to 3 months, because over that time frame, I would then anticipate the 101.81 to 109.56 region. Until then, this is bottom picking galore. And for you 2 to 3 week swing traders, you're now anticipating, once you buy this area, 219.15 and dropping. And you 2 to 3 month near-term investors, bottom picking 176.23, you're anticipating the mid to upper 250s. You can plan for that. As we test this area, you may consider reaching for 250, 255, strike, out of the money calls that don't expire. I would go 6 months out, even though I think it'll take half that time. We're pushing 10 minutes. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. I'm telling you, the SPY is testing significant resistance. We put out some beautiful stock picks this week. Netflix is testing its own 15-month channel top, 2-year channel top. And I'm not going to give you the number, but we're not above it. And this market, Netflix, is susceptible to falling away. Check it out. 5-day free trial, wickedstocks.com. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.